Hash moving averages explained. The chart tool pro traders use. Most people lose money in the stock market because they're trading blind. They're literally ignoring the one tool that separates successful traders from broke ones. Today I'm showing you exactly how to use moving averages to know when to buy, when to sell, and when to stay the heck out of the market. I'm not a financial advisor. And this isn't investment advice. I'm just showing you what the pros actually use. Part 1. What the heck is a moving average? Look, a moving average sounds complicated, but it's literally just an average. It's so simple you'll be mad you didn't understand it sooner. Imagine Apple's stock price bouncing around like crazy. Up $5, down $3, up $7. Your brain can't actually see the pattern because it's moving too fast. That's where a moving average comes in. A moving average takes the last 50 days of prices, adds them together, and divides by 50. That gives you one number. Then tomorrow, you do the same thing but drop off the oldest day. You take the last 50 days again, add them up, divide by 50. That's your new moving average. You do this every single day, and boom, you get a smooth line drawn right over the price action. That line is the moving average. It filters out all the noise and shows you the real trend. The most popular ones are the 50-day moving average and the 200-day moving average. I'll tell you exactly why in a second. Part 2. Why pros actually care about this. Here's the thing that will blow your mind. When a stock price crosses above its moving average, that's when professionals start paying attention. Let's say you're looking at Microsoft. The stock price is bouncing around between $300 and $310. The 50-day moving average is sitting at $305. When Microsoft's price drops below $305, it's performing worse than its average. When it shoots above $305, it's performing better than its average. Why does that matter? Because professionals use this as a signal. When a price crosses above the moving average from below, it can mean the uptrend is starting. When a price crosses below from above, it might mean the downtrend is starting. Now here's the real money move. Professionals don't use just one moving average. They use two. The 50-day moving average shows you the short-term trend. That's what's happening right now. The 200-day moving average shows you the long-term trend. That's the bigger picture. When the 50-day is above the 200-day, that's called a golden cross. Watch out. That's when money starts moving into that stock. When the 50-day crosses below the 200-day, that's called a death cross. That's when professionals start exiting positions. I know that sounds dramatic, but it works. Let's look at real numbers. Part 3. How you actually use this tomorrow. Let's say you've got $5,000 sitting in a Fidelity or a Robinhood account. You're thinking about buying Tesla or the S&P 500 through an index fund. Here's exactly how moving averages help you. First, you pull up the stock chart. Most brokers have this built in. You add the 50-day and 200-day moving average to the chart. It takes 10 seconds. Look at where the price is right now compared to these lines. If the price is above both moving averages and the 50-day is above the 200-day, you're in an uptrend. That's when you're buying. If the price is below both moving averages, you're in a downtrend. That's when you're sitting on your hands. That's when you're not touching that account. Let's say you're a Roth IRA person. Maybe you've got $40,000 you're planning to invest over the next few years. You don't need to move averages for a Roth IRA. You're buying every single month regardless. Moving averages are for people trying to time the market short term. But if you've got a brokerage account and you're trading more actively, moving averages are literally free money sitting on your screen. Here's what I actually do. I look at the daily chart of whatever I'm thinking about buying. I check if the price is above the moving averages. I check if the 50-day is above the 200-day. If yes to both, I buy. If no, I wait. That's it. That's the professional move. Final push. Most Americans are investing completely blind because they don't understand chart tools. You just learned one that separates amateurs from pros. Start using this tomorrow. Open Fidelity or Robinhood. Add moving averages to one stock you're interested in. Watch how the price interacts with those lines. You'll start seeing patterns in literally 2 weeks. If this made sense to you, please hit subscribe. We're dropping advanced trading strategies every single week. Your future self will thank you. Now go make that money. I'll see you in the next video. Word count 847.